Welcome to Josie to Lagos, an African current affairs and policy show from Africa for Africa. What we do on this podcast is we make sense of the unfolding events on the continent, and we also explore the fundamental question: why are Africans not achieving the full potential that the continent has? And pursuant to that, how can we reach that potential? Basically, it's a podcast that seeks to make sense of Africa, and it's a podcast that does more than that. It seeks to find creative solutions to the problems that Africa is facing. Today's episode is going to do two things. Number one, it's going to give an update on a critical story. And number two, it's going to leave you with a lunchbox, a final thought, a last thought, something different from the update story, but something that will give you food for thought and hopefully provoke some ideas in your own mind. So, what are we doing? We are going back to Zambia, and we're going back to Zambia to follow up on what has happened since the dramatic and unexpected firing of the Zambian central bank governor. Now, this was a big story because the markets generally do not like surprises, and they especially don't like them when it concerns issues of central banks in African countries. Now, if you missed that episode, you can go back and listen to episode 9. But if you haven't listened yet, I will try to cover some of the highlights in this particular episode. So what happened earlier this year? Why are we coming back to this story? What went down in Zambia? On the 22nd of August 2020, unexpectedly, to much surprise of the global community, the financial community, the Zambian president Edgar Lungu summarily dismissed the central bank governor Denny Kayala, and he replaced him with the former deputy finance minister Christopher Mpanza Mvunga. Now, this caused so much commotion and drama that even the South African Minister of Finance, Tito Mboweni, got involved. And he typically got involved by going to Twitter demanding answers. While he deleted the tweets a few days later, and he was officially reprimanded by the South African president, Cyril Ramaphosa, the cat was out of the bag. There was a lot of concern about political interference with the Zambian central banks. In general, markets prefer for central banks to be independent of political interference and to focus on constructing monetary policy based on market fundamentals and certain macroeconomic principles. So when they see moves which create any form of anxiety about the independence of a central bank, about the central bank shifting its market policies, it becomes an issue. And especially because there is a massive problem that is happening in Zambia in the world of finance. Zambia is sitting on a debt crisis, one of the worst debt crises in Africa, and we're going to talk about that a little bit more. But let's talk about Zambia specifically. Let's get a gist and a feel for where Zambia is and how Zambia is doing. Zambia has a population of 17 million people. It is Africa's second largest producer of copper after the Democratic Republic of Congo. Its demographics are such that 60% of the population are actually under the age of 25. This also means that it has a very high dependency rate. A dependency rate indicates the number of people who rely on other people's income for their own survival. The dependency rate in Zambia is 81%. 56% of its population still reside in rural areas, which are under-resourced and under-facilitated. All of this should show you that it's a country that is not robust economically and is prone to some challenges, and in fact many would define it as a poor African country. I hate that term myself because I don't actually think that Africa is poor. I think that Africa is suffering from a result of poor leadership, specifically mismanagement, miseducation, and misappropriation, all of which really lead to the problems that Africa is seeing now. So as I mentioned earlier, Zambia is in the middle of a debt crisis. It's a debt crisis that has been amplified and complicated by China. Zambia actually, at this stage of our conversation, has defaulted on some of that debt. And there are debates about what should be done about Zambian debt in particular, but about African countries that are facing high debt loads in general. Some are calling for debt restructuring and others are calling for debt forgiveness. And we're going to discuss that later in the episode. But now let's actually contextualize exactly how much does Zambia owe and who do they owe. Zambia owes almost 12 billion US dollars to international lenders. The exact number is 11.97 billion. And the rate of debt accumulation has been relatively rapid. In December of 2006, debt in Zambia stood only at 217 million US dollars. By 2011, the Zambian debt load was 1.9 billion. But now, if you fast forward, the Zambian debt load has gone to all the way to 12 billion. So it has moved quite aggressively. They've gained 10 billion of debt in 9 years. And some of that debt has been gained just recently in the last 2 years. So who does Zambia owe? Zambia owes 4 entities. Number 1, international lending institutions. Number 2, private finance institutions. Number 3, commercial banks. And number 4, other governments. The nature of the debt, that 12 billion that we spoke about, is as follows. 3 billion of this debt is in outstanding eurobonds. $3.5 billion of it is in bilateral debt. 2.9 billion is in commercial debt and 2.1 billion is owed to multilateral institutions. Eurobonds are debt that is collected by a state to fundraise for its particular projects by issuing bonds to the general public. Eurobonds specifically are bonds that are issued in a currency other than the country that is issuing them, and they are generally issued in US dollars. Bilateral debt is debt that countries have with each other. Commercial debt is debt that comes from commercial banks and it has a market value. So it's not a low interest debt, it's a market value debt. And it's oftentimes contrasted with concessional debt. Concessional debt comes from loans that are issued on extended terms with substantially lower interest rates and substantially longer grace periods for the maturity of the loan. So that's the difference, if you are wondering, between a commercial loan and a concessional loan. So Zambia owes, go over it again, 3 billion in outstanding euro bonds, 3.5 billion in bilateral debt, 2.9 billion in commercial debt, and 2.1 billion owed to multilateral institutions. Multilateral institutions are institutions such as the World Bank and the IMF. The debt problem in Zambia has accelerated, and if you consider the ratios that everybody looks at to get an indication of how bad it is, its public debt ratio increased to 80% of GDP in 2019 from 35% at the end of 2014. And its debt servicing as a percentage of state revenue is currently at 32.6%. So a lot of money is being spent to pay the interest payments on the debt. And it's very important that whenever we're having conversations about debt, we have to consider that there is always a consideration about capacity to pay the interest and the principal amount. As your debt risk increases and your default rate increases, there's an increase in the interest rate that you are charged, and this compounds the original problem. Now, there were several major interest payments that were due this year that Zambia had, and some were due early next year. And in total, Zambia was looking at paying 1 billion US dollars in interest payments to various lenders. The only problem is Zambia doesn't have the money. They haven't had the money for a while. The government of Edgar Lungu has not been fiscally responsible, and it's gotten worse over the last 5 years. And even more worryingly, the full extent of some of the debt is not even known, even by high information organizations such as the IMF and the World Bank. A key thing for everyone to be aware of is that some people are very concerned that not all of the Chinese debt has been exposed and disclosed. China has been lending to African countries using above the table and below the table deals. And what this means is that it makes it very ambiguous for lenders to know how much do you owe China, how much do you owe us. And that ambiguity about the level of debt is one of the complications around conversations about restructuring the debt or extending more credit to Zambia. The concern fundamentally is that you could borrow money to Zambia and that money could end up going to China and not necessarily where it was supposed to go. A secondary issue around this debt and the nature of the debt is that China is a critical actor. Of all of the debt owed to G20 countries, China is holding over 60% of that particular debt. And there's a perception and a strong critique that China is using debt trap diplomacy in dealing with African states. The accusation and the allegation, and it has some credence to it, is that China is giving loans that are impossible to pay and using key strait infrastructure and minerals as collateral in the case of a default. Effectively, if you can't pay China, they take your minerals and they take over your airports and seaports. And they've done that in a few countries. And what this does is it maximizes their supply chain efficiencies. And this is part of the Belt and Road Initiative strategy of making sure that China can get raw materials delivered to China and goods delivered to whatever destination around the world in record time. So having covered the nature of the debt that Zambia owes, what's the update? What has happened since the dramatic firing of the Reserve Bank governor or the central bank governor on the 22nd of August 2020? Well, I'm going to tell you, and I'm going to look at each of the different categories of debt and how Zambia has navigated those debts and what ethical and moral challenges still lie ahead for Zambia. Now, there are 4 debt challenges that Zambia was facing. The first one was with private creditors. So they owed private creditors a lot of money, and private creditors representing more than 9 trillion of assets in US dollars this year formed a group to negotiate debt relief for African nations. One of the nations, of course, was Zambia. Now, this group is called the Africa Private Creditor Working Group, and it represents 25 asset managers and institutions that finance countries and corporates via either eurobonds, syndicated loans, and trade finance. Now, the ethical concerns which exist around these private lenders is that they lend at a high interest rate to poor African countries because they always define those particular loans as high risk. And the moral hazard here that exists is because they actually don't have an incentive to classify those loans as low risk or even to mitigate their assessments. So they will always have a negative assessment of African states that they borrow to. And what that then means is that they stand to make a lot of profit. And many people have said that these loans in and of themselves are unethical and they are loan shark type of loans. Now, what then happened this year is that Zambia actually said to these lenders that we are not going to be able to pay those interest payments. In September of 2020, Zambia decided that it would temporarily suspend these interest payments to private creditors. The Zambian government has suspended them for 6 months, starting from October. And even though Zambia says that this freeze is due to a cash crunch and not a cancellation, many in the world of finance view that as being a debt default of some sort, although it's strictly not being considered as a default. Zambia basically told these guys that they need to fund COVID-19 and the interest payments are preventing them from being able to afford all of the health interventions that they need in order to be able to manage the pandemic. So that's how Zambia dealt with its private creditors. Its second challenge around debt was China, because it owes China a lot of money. And what it has then done with China is that it has made deals. One deal was made in October and another deal was made in November. So the first deal was an agreement with the China Development Bank to defer its debt repayments. Zambia owed over $391 million to the China Development Bank, and they negotiated a deal where the interest and the principal due, which was due on the 25th of October, would be deferred up until the 25th of April 2021. And in fact, the interest is deferred, but the principal amount is now being rescheduled over the life of the loan facility. So that was the first deal. In November, Zambia managed to secure a deal with China to defer payments of debt to the Exim Bank of China, which has advanced loans of $2.6 billion to Zambia to pay for various infrastructure projects. This particular deal was made under the framework of the G20 debt restructuring. Now, it's important to note that the Chinese debt is complicated because some of it is issued by state-owned institutions and other debt is issued by private Chinese banks. The complexity is that very few people actually believe that the private Chinese banks are independent of the state. And the other level of complexity is that when China now is restructuring the debt, it's doing for the debt that is coming from the Exim Bank of China as well as the China Development Bank, but not these other private lenders. And these private lenders, if you will, so they gave money to Zambia on commercial terms. So Zambia owes them a lot of money as well. And the other thing that everyone has to be aware of is China is actually very reluctant to go easy on African states, because the whole part of being a loan shark or using some kind of debt trap diplomacy is that you actually want the person to get into debt distress so that you can then extract the things that you actually value from that debt transaction. So if you actually give them debt relief, that may actually not work in your favor. The third challenge around debt that Zambia was facing was G20 debt owed to the G20 group of countries. What Zambia has now successfully done was to obtain debt relief from the G20 member states under the Debt Service Suspension Initiative. And this Debt Service Suspension Initiative, the DSSI, it spreads the interest payments over 5 years. Initially, this agreement was approved in April, and it offered temporary suspension of official sector or government-to-government debt payments. But now it has been extended until the 30th of June 2021. The nature of the DSSI is that the payments covered are not forgiven, but they are delayed. So this is not necessarily a forgiveness, but it's a delay. And there was a difficulty in getting this agreement because China was not very willing for some of the things that people were trying to get it to commit to. China still wants to make sure that its commercial banks are repaid by Zambia, and at some point it was actually asking for Zambia to pay $200 million to Chinese institutions before they were willing to even restructure the debt or agree to this extension under the DSSI. The final debt challenge that Zambia had to deal with this year was the issue of the eurobonds. Now, there was a very difficult group that they had to deal with, and that was the Zambia External Bondholder Committee. The Zambia External Bondholder Committee is a consortium of lenders that own 40% of Zambia's outstanding eurobonds. These creditors came together to try to figure out how to get their money. A eurobond interest payment was due on the 4th of October 2020. The amount due was $42.5 million. Zambia did not meet that deadline. And then they were given a 30-day grace period, which ended on the 14th of November. And they missed that particular deadline. And what this effectively meant was that Zambia had defaulted on its eurobond. And they were actually trying to negotiate for an interest payment holiday of 6 months. But the lenders were refusing. So this particular debt, they were not able to renegotiate. And what it does is that when you default, it comes with contractual and rating consequences. One of the contractual consequences is that of acceleration. Acceleration is what happens when the lenders then demand that the principal loan amount be repaid at a faster rate. Now, it's important for me to explain bonds a little bit more here. A bond is a loan from the public by a government. The public becomes a partial lender to the entity issuing the bond. A bond is actually a form of a IOU to the public. The holder of the bond is the lender or the creditor, and the issuer of the bond is the borrower or the debtor, and the coupon is the interest. The coupon rate, the interest rate, is actually called that because the bonds themselves used to come with a coupon attached to them, and these coupon rates are the interest rates. People who give you money on the basis of bond loan are looking to make money from the interest, and they're also looking to get their money back. And so bonds come with a coupon rate, which is the interest rate, and the maturity date, which is the date to which the principal amount lent is due. So if there is an acceleration, what that means is that the due date for the principal amount then accelerates. And if you recall, Zambia owes 3 billion in terms of the outstanding eurobonds. So by defaulting, they have put themselves into a very tricky position. And that's where the issue is right now. Other implications of a default are that you get downgraded by the international rating agencies, Fitch, Moody's, S&P. And what that means is that you are less likely to be able to borrow more money from international markets in future. It also does have the impact of depreciation of your currency. In fact, this year, the Zambian kwacha has lost a lot of value. At the beginning of the year, it was trading at 1:15 with the US dollar, and now is trading at 1:21. And what that means is that people who are holding kwacha, people who have their assets priced in kwachas, and people who have been saving in kwacha have had 30% of their wealth evaporate over this 2020 period, and it will exacerbate as a result of this debt default. Now, the debate that is happening about the debt default in particular is that what should actually happen is that lenders should forgive Zambia for its debt. That's one argument that people are making. They're making this argument because they're saying when people were borrowing Zambia this money, a lot of them knew that Zambia was overextended and Zambia would not be able to pay. So to come around and say they must pay by any means necessary now is a form of exploitation, considering that you ought not to have given that debt in the first place. That's the argument that the people who are arguing for debt forgiveness make. The people who are arguing for debt restructuring, however, are saying Zambia has the capacity to pay over a longer period of time, that you should not necessarily forgive Zambia for its debt because this debt was taken on knowingly, and the Zambian people have benefited in some part from the infrastructure projects that have been built, although not all of them have been beneficial to the people. There's obviously been a lot of corruption. There's obviously been a lot of tender fraud, a lot of overpricing on some of these projects. But the argument is that Zambia has in fact benefited from the money that they were given, and they should pay back. People who are also in favor of debt restructuring, some of whom are representing China and some of whom are representing private lenders, are also worried that if you forgive the Zambian debt, what that therefore means is that you must forgive all of the other African countries which are overexposed in terms of debt. That applies to Mozambique, that applies to Angola, and many people are not willing, even Ghana, to do that because they want to get their money back and they want to get it at the interest rates which they had agreed to. And many others are saying you should not do that because your interest rates were not fair to begin with, because in the first instance you had undervalued these countries' risk status, but also you then made your debt so expensive that it set them up to fail anyway. It's a very complicated position, but I'm of the view that a lot of the debt that was given to Zambia was given unethically and without the right controls put in place. And in fact, when the first eurobonds were being issued in 2012, there was lots of celebration on Wall Street, and a lot of bankers saw that this was going to be an opportunity to make a lot of money from an African country that had just recently been given a credit rating again. So I think there is a large element of exploitation which has happened here. And there's also the issue that the way that China has structured its debt deals with Africa was never designed to let those African states be able to repay. So I am of the view that there's a way to solve the debt crisis in Zambia, but that involves debt bundling. And the debt bundling needs to be done under the IMF. And I think the IMF is the best body because you have maximum transparency with the IMF, whereas you don't always have that with other structures. I don't think that this debt bundling should just be done without other measures being taken in addition to the debt bundling. Number one, I think that there has to be a debt repayment holiday, and that holiday has to be long enough to allow for one, a COVID-19 response to be carried out by Zambia. Number two, market recovery, because we all know that 2020 has not been a normal year in terms of economic performance. So if the copper price bounces back, if the demand for copper bounces back, then the people of Zambia will have more revenue in order to deal with all of the various issues that they need to. Number three, we have to wait until there is a break even for all of the infrastructure projects that Zambia has spent money on, especially from these developmental loans. It doesn't seem sensible to want them to pay back or to start paying for an investment that has not yet started generating revenue. I think that the ethical thing to do, especially considering that this is an indigent nation and one that is really struggling, is to wait for the road systems to be finished, to wait for the power stations to be finished, and only then to start asking them to pay back when they are now at a break-even point. Otherwise, they are not in a viable position to pay back those debts in the long term. So those who say they care about debt repayment, those people have to agree to debt consolidation and to a debt holiday that is long enough to make Zambia sustainable in the repayment of its debt. I also think that when you do this debt bundling under the IMF, other things have to happen. Number one, the lenders, the private lenders who lent at unreasonable rates, they have to take a haircut on their interest rates. It doesn't seem justifiable to want to earn 200% or more from lending to countries such as Zambia. They have to take a haircut on those interest rates to put them more in line with the reasonable expectation from the money that they borrowed to Zambia. Number two, under this debt bundling, I think you need full disclosure from China. I think China needs to disclose fully how much money has it actually given Zambia. It's very difficult for us to respond to the debt crisis in Zambia with ambiguity around how much is actually owed to everyone. Number three, there has to be a removal of all commercial rates on all of the loans. It's unethical to give a country like Zambia loans at a commercial rate. All of the loans have to be converted into concessional loans. And as I said earlier, concessional loans have a lower interest rate. They are more reasonable for countries such as Zambia, and they are more ethical because you don't want to actually put a country into a position where over 30% of its revenue is going towards interest payments, because what that means is that the citizens are adversely affected, their developmental needs are adversely affected, and this is not a country which is in a position to service those payments in that manner. If we consider whether or not there's a precedent for this, I would submit that in fact there is. When individuals are in debt distress, we do allow them to enter into debt consolidation programs. And those debt consolidation programs require the debtors or the creditors to actually, and those debt consolidation programs require the creditors to wait for longer for an individual to actually get into a position of financial health before they can start collecting monies again. And I think that if it's ethical for individuals, it's also ethical for countries. While this may not be going as far as saying total debt forgiveness, I think that it strikes the right balance to make sure that the money that is repaid back is fairly repaid back and is paid back by an entity that is in the right financial health in order to be able to repay that money. I think if you don't do it that way, you cripple Zambia, you cripple its diplomacy, and also you allow for entities such as China to be able to exploit countries such as Zambia. I do think that all of the debt needs to be bundled under the IMF because I am relatively worried about the aggression from China when it comes to collecting money and the kind of tactics that they will impose if they feel like they have not gotten that money back. And I don't think that those tactics are to the benefit of Africa. And I think that this would be the right way of signaling to Africa and the world that the debt issues will be solved in an ethical and responsible and pro-Africa manner. That's really where I think we're going to leave the topic of the Zambian debt. Now we go to the lunchbox. Here's the lunchbox. We need an African Youth Congress. We need an African Youth Congress that is independent of the current African institutions. We need an African Youth Congress that is independent of political parties and the older generation. Why do I say this? Africa right now is a young continent, and the youth of Africa are losing out. They are losing out economically, they are losing out socially, and the youth of Africa need to chart their own way to a destiny that they deserve, a destiny of their own making. We need to think about how to trade at a peer-to-peer level as small businesses, as young Africans. Unfortunately, a lot of this continental discussion around trade is a big business discussion. It's a big corporate discussion, but it doesn't look at how we can share resources at the grassroots level, at the young African level. And unless young Africans come together and start brainstorming about how they can use different technologies, how they can use different networks to create trade at their level, they will never be economically empowered. We need to think about economic policies that favor young people and how to advocate and implement them outside of the traditional order of things, because the traditional order of things is not working. That's a given. The reason why I'm putting this to you is because I've really been looking at youth movements in Africa, and they've been leaderless, and they've been organic, and they've been brilliant in raising certain issues, be it End SARS, be it Zimbabwean Lives Matter, be it Congo is Bleeding, be it Fees Must Fall, be it Roads Must Fall. All of these movements have had youthful energy, youthful brilliance, youthful vigor, but they have been lacking one critical element: continuity, organization, philosophy, and even more than that, a public rollout outside of the protest element. It's time for young Africans to look back at the African story. It was African congresses which were held in the United Kingdom, which were held in America, which were a part of the critical process of generating a new wave of leaders in Africa who pushed for independence. And now we are at a point where the leadership of Africa is 70 years old, 78 years old on average, and they are incapable of delivering the vision for the youth of Africa. And to be honest, they won't be around for much longer. So waiting on them to get an Africa that works is naive. It's like waiting for IBM to invent Twitter. IBM could never invent Twitter. IBM could never invent Facebook because the elder generation of computer scientists was not designing and thinking about the social elements of the internet. It took a new generation of tech entrepreneurs to build these companies. And it's going to take a new generation of thinkers, of Pan-Africans to build a new Africa, an Africa that actually is well managed, an Africa that is efficient, an Africa that is tech independent, an Africa that is economically independent, an Africa that can participate on the world stage as a peer and not a beggar. It's going to be important for Africa to organize, especially for young Africans. By 2050, Africa is going to be the most populated area in the world. And if we're not organized, and if we don't prepare for that demographic dividend, we will have a chaotic environment in Africa, and we will not be able to tidy up what needs to be tidied up at that point. We need to start preparing now. We need to start organizing as young Africans now. My belief and my conviction is that the African youth are brilliant, is that the African youth are willing to do the work, is that the African youth are passionate about Africa. My belief also is we cannot win without organizing effectively at a continental level. We cannot win. My other belief is that the old men who are currently running this continent are not capable of delivering the outcomes that young Africans will need in order to really participate in the global stage as equals. They've had their run, they achieved what they needed to achieve, which was independence, and to some extent just managing whatever the status quo is. But the status quo has to go. And in order for that to happen, the young people of Africa need to do more than the protest actions, which have been very effective at highlighting the issues that exist. To some extent, Buhari will always be able to deal with an EndSARS protest. To some extent, the leadership of Zimbabwe, Emmerson Mnangagwa, will always be able to deal with a Zimbabwean Lives Matter movement. We need to move beyond that. We need to take that energy and redirect it and really create new discourse around that direction we want Africa to take, and to try to brainstorm and disrupt the status quo using the available means. It's not going to be military revolution in this day and age. It's going to be the youth coming together, applying their minds, thinking critically, creatively, abundantly about how to reshape and reform the Africa that they are inheriting. It's really on us, and it's really on us now. That's the lunchbox, the food for thought. Wonder what you think about it. Curious to hear back from you about the lunchbox, about Zambia. What do you think about this debt crisis? What do you think about other African countries that are facing the debt crisis? Looking keen to hearing from you. Thank you so much for all of the support. We're on episode 20 now. Thank you for listening. That's all from us, from Josie to Lagos. Until the next one.